Hello everyone and welcome to the Investing Angles channel. Today we are doing live video and we will discuss a lot of instruments. First of all, we will discuss US major stocks like S&P 500, Dow Jones and Nasdaq. Then we'll move into the sectors for SP 500 sectors, and we'll also discuss a big tickets, some stocks like Microsoft, Netflix, Apple, NVDA, and a few more. After that, we will move into a crypto world. So we'll check what is happening right now with Bitcoin. And after that, we will wrap the session with the commodities, with silver and gold, with precious metals. We will see what is happening right now and what are the perspectives for the closure today. All right, so let's get started. Before we start, please make sure to subscribe to our channel so that you always know what is happening and you always know what will happen. All right, so that's the S&P 500 futures chart. That what we are seeing right now. This is Elliott Wave perspective. And what we are seeing first of all, at the end of December, futures formed an impulse down, and they spent a couple of weeks consolidating for wave 2 or B. And right now they are moving down, and what we are seeing, there are two most probable scenarios here. First is the blue one, and the second one is the red. If the blue one, it would be something like this. So this, let's say this would be A, B, and C, and here it ends, and after that we will see a rally continued. However, there is also a chance that S&P 500 goes lower and it ends up in this red area, in this red target. In this case, we would consider this scenario as if S&P 500 is building a bigger impulse down, and then we would be considered something like this. So this would be 1, 2, wave 3, 4, and 5, somewhere here. So that's the perspective, and this is in case it moves here. Well, so far we are seeing that both scenarios remain on the table, and now we need to talk about candles to see what they are telling us. So this is the candle frame for SPY, QQQ, DIA, and IWM as it is right now. So what we are seeing, that all candles are green. However, I cannot say that they are already a reversal candle. So this is the first step. This is possible first step. For example, right now SPY is backtesting its 100 days moving average here, and if successful, it should close above and go a little higher. However, if it stays below and technically it closes on neck or in neck, it will both are bearish continuation of patterns, and well, this is what I'm looking for here. Similar thing for Nasdaq. It could be in neck or on neck pattern, bearish pattern, if it stays like this. So the color of the candle doesn't matter at this moment. DIA, Dow Jones, looks more promising actually. It is forming right now a piercing line, and if it completes like this, then we might expect a little bounce here, a little higher. But what I would consider here from Elliott Wave perspective, maybe it would be a running flat of some sort. So maybe this ABC formation, and then the DIA would move down. For IWM, it's technically the same as Nasdaq or or S&P 500. So it is rather in neck or on neck pattern. So it's a bearish candle for now, and we are seeing that first of all, Russell is the biggest has the biggest drop of the top. It's over almost 12%, and right now it is testing the 200 days moving average, the red line. And well, if it is unsuccessful, then we will see a continuation, and it would be a flip, solid flip for bears. Well, this is the daily candles. However, we must not be fooled by them, and we'd like to zoom out and have a look at the bigger frame. So this is the 8-day frame, which is closing tomorrow. And you can see that these candles are solid bearish, and there is technically no reversal inside, and these candles lost major support points, and they are closing below the lows of previous one. So DIA is the only one kind of questionable right now, but we'll see how it closes tomorrow. If it closes below the week of this big red candle, let me mark it here. So if it closes below this red line, it will be strong bearish move, and so on. So technically we can IWM is the same bearish. Technically we can estimate how much the index needs to advance for a bullish closure tomorrow. Let's say Nasdaq would need to go about 1.1% to keep its odds bullish, pardon, for tomorrow. Well, it's totally doable, but we'll see. Given the momentum, I'm not saying it's very probable at the moment. However, in the end of the day, we'll post our regular daily report for Nasdaq. For major indices, we'll discuss roadmaps there, and the candle closure once the day is over. You can check them on our website, investingangles.com, under index package. All right, so that's Nasdaq. Let's now have a look at Nasdaq wave. So technically, it's very similar to what we are seeing for S&P 500. The only thing that it's a bit more aggressive, and it's kind of normal for Nasdaq, and that's totally fine. We will see that right now it's building a wave, and by multiple technical indicators, it looks like it's wave 3 of a certain degree. It could also be a wave C, because it's from a technical perspective, it's difficult to separate these two. Wave C or wave 3. They have a very similar footprint. All right, again, this is the C target, blue rectangle. If it ends here and reverses, it will be the end of this correction, and most likely will resume. However, if it breaks into and ends here somewhere in red rectangle, by the way, it can go a little lower here, then we would consider this as an impulse of a higher degree. And the last index I wanted to talk about is the Dow Jones. This is our projection that I've been tracking since the end of December. So far it is bearish, and yeah, if we see any reversal here, candles will tell us first. Similarly to the other two, the other two indices we just discussed, the same for possible formations, ABC or 1, 2, 3, 4, 5. At this point, it is difficult to say. The wave down is fairly young, and we need to see more more moves in order to estimate its length. But from the bigger perspective, this is an ABC, is a primary for now. Okay, so that's the indices. Now let's have a look at what sectors are telling us. So these are 8 sectors of S&P 500, and I would like to start with financial as XLF here. So what we are seeing is the last week completed with a strong bearish candle, and today financials are trying to reverse it, but unfortunately they are so far sitting below the midpoint of this candle, and it is considered as a bearish continuation, although they are trying to backtest this 100 days moving average. From the perspective of the weekly, if we switch to the weekly frame, this is much more concerning at this point, because what we are seeing here is 3 black crows clearly, then 2 candles of consolidation, and another move down very strong through multiple support lines, now resistance. If XLF doesn't reverse here and doesn't close above the last week high, it will be a bearish continuation most likely. So that's the expectation, that the move for XLF. XLI industrial, so technically they are in the same boat as financials, the same 3 black crows. This is the weekly frame, and a strong bearish completion of last week. So that at the beginning of this week we might see some attempts to reverse, but most likely I would expect bulls to give up and to move down here on industrials. Technology, XLK, right now after the last week closure, which was a strong bearish one, we are seeing an attempt for a green candle and move higher. However, it might end up just being a closure of this gap, and once the candle hits the resistance line, it will reverse. So maybe 1 or 2 days of slightly neutral or even bullish moves. The chances for XLK to continue down are fairly high. Okay, moving to the next one, consumer staples. They went down way too fast and way too far, and right now they need to consolidate here, and this is what we are seeing. This is the weekly formation. Let's switch to a daily, see whether any difference here. So this consumer staples are solid below 50, 100 and 200 days moving average, and so far the daily candle is not impressive enough for being bullish. I would say that this is just a consolidation before it is moving lower. Speaking about utilities, this one utility was I think one of the first to break to make its weekly frame bearish totally by flipping this 8x20 EMA bearish in a bearish cross, and right now it is going down. I'm not seeing any reversal potential here, and indeed daily candles are bearish, and the chances for breaking this 200 days moving average are significant, especially considering this freshly made 50x100 DMA cross. Alright, so let's move on to healthcare. So this healthcare, I would like to look at a bigger screen. So what we are seeing here is the potential development of a flag. So this is, let me mark it here. So this is potentially a bullish flag, a bearish flag developed here. So let me just change the color so it is more outstanding. All right, so this is the perspective, and this is what is happening. And I think that healthcare is ripe for a reversal, and it might get a little higher, but in general I would expect it to reverse. And why I'm saying so, because this frame, I'm switching to 1 hour frame. It is not impulsive at all. Some might think that this is an impulse up here, the first wave, but unfortunately it is not. If we measure this particular overlap here, this two. So we know that in the Elliott waves, wave 1, potential wave 1 shouldn't overlap with wave 4. If we measure these exact points, they are overlapping just by 1 basis point. And well, it technically invalidates the first wave as an impulse, and going forward, this wave is not also an impulse because of this another overlap. So in this case it's a flag, and I would say that the perspective for this flag would be quite significant. Just a rough estimate without measuring it, it should go somewhere around 135, 130, even 130. That would be, well, let's measure it. Let's see how it goes. Okay, so that's the perspective for. All right, so that's if it reverses right here, then we should be seeing. Yeah, I think I was right. So that would be a reversal, and the target for the flag somewhere here in the end of January, middle of February. So somewhere between 132 and 129. All right, so that's the healthcare perspective. Let's move on. Consumer discretionary. The weekly closure was strong bearish, and again this week starts with a green candle, perhaps trying to close the gap. So far, the daily candle is not bullish. It's a bearish continuation. We'll see how it goes. So it looks like a back testing 50-day moving average. Speaking about the energy, the next one, energy fell through multiple resistance, well, support points, now resistance, and is trying to regain some of them. We'll see how it closes the day. So the day is not over. If it closes like this or goes lower, goes higher, I would consider maybe it's a time for a bigger reversal. But again, we need to see the closure. And the weekly was technically bearish because 3 candles closed below the high of this red one, and if the fourth is successful, yeah, that's good. But right now the odds are with bears, and we would need to see the exact closure in 4 days. All right, so let's move on to the bigger stocks right now. So what is happening right here? So for Microsoft, first of all, big stocks closed the week last week with strong bearish candles, and well, so far we are not seeing any significant moves. Everything is falling down, even though that the candles are green. It doesn't mean that they are going to be a reversal one. So Microsoft, for example, is forming an in-neck right now, and with the chances to continue down. Maybe a little bounce here, but the candles are not aggressive enough to reverse this trend. Amazon made a fresh 8x20 EMA bearish cross, and the chances for it to go lower are fairly significant. Speaking about Apple I think was one of the had one of the strongest, yes indeed, had one of the strongest bearish closure of the week last week, and so far we are seeing that it is trying to do a reversal. If it's successful, I don't know yet, but we need to see at least 2-3 candles in one direction, in bullish direction, to make a bottom. So far, this little doji could be just a posing doji. And by the way, in last 2 days, on Friday, Apple lost support at 50 days moving average, and today is trying to hang up with a 100-day. If it loses it, well, the next one will be at 200 at 215 approximately. Speaking about Tesla, Tesla is trying hard for the last 3 days for recovery. However, it's not conclusive and it's not impressive. And while doing so, Tesla managed to make this cross, bearish AMA cross, 8 by 20 lines. The chances for it to go lower are fairly significant. However, we need to see like a very strong signal. I'll try to make a piece on Tesla, a video analysis on Tesla in the next couple of days and post it on our channel. Meta, nothing conclusive here. We'll just wait for a more direction from the candles. Speaking about NVDA, let me bring it here. So NVDA is totally bearish, and last week we pointed out about that it's not healthy and it's going to reverse. So it indeed reversed, and we said that if it breaks through 136.70, the next stop will be 126, and it looks like NVIDIA is on track. It is backtesting right now the 100 days moving average, and well, if it's successful, good, but it doesn't look like it's going to be a very successful move. So 126 is the next target, and if it breaks it, then the 119. Okay, so and the final one is Netflix. Netflix is just falling down. We did about a week ago, if you search on our channel, you can find the long and midterm analysis for Netflix. It has it all covered. Candlestick perspective, Elliott waves, most probable targets, and so on. Alright, so let's move on to the next part of our presentation. It's Bitcoin. What is happening right now with Bitcoin? We have 4 hours to go till the daily closure. So far it is threatening to close below this level, 92227. It's at Bitstamp, and it's a low of this green candle which Bitcoin made on Friday. If it closes below this low, it will be a strong bearish formation, and the chances for a move down will significantly increase. I'd like to emphasize significantly. On 3-day frame, Bitcoin formed a tower top, and this green candle that ended yesterday was just a consolidation before the next move. We might see a few candles like this of this size consolidating here before the next move starts, and it might take a while. Each candle is a 3-day, so we might see another 3-6 days of consolidation before moving down. And this was our bigger concern. So this is the weekly frame, completed with a dark cloud cover, which has better chances to continue down. That's it about Bitcoin. By the way, a few hours ago we posted a more detailed piece on Bitcoin covering Elliott waves and targets and perspectives. So if you are interested, you can check our previous video. Let's have a look at what is happening with silver. Well, silver Silver was signaling that it is about to reverse for 4 days in a row, and finally it breaks through. Well, we had a clear rejection at 50-day moving average, a bearish cross 50 by 100 DMA, and silver is moving down. So far, it is very strong. If it closes the day like this, well, it's a clear reversal. It can in the remaining 2 hours it can even go and rally about 1.6%. It wouldn't change anything. It still will be bearish. And another strong confirmation, if this happens, if silver goes just a little lower, a tad lower, and this red candle closes below the open of the green one, the previous green one, it will be a very strong confirmation, and the bearish odds will elevate in addition to the daily. This is 3-day. And it's interesting how one day can change everything. So on Friday we were thinking that, oh, the silver had a chance to form 3 white soldiers, but unfavorable technical conditions alerted us that this might be a fake, and it looks like it is. And another candle that is closing today is an 8-day frame. So far it is somewhat bullish, but I wouldn't count on it until I see a strong confirmation here. All right, so let's move on and see what is for silver. That's the chart that we shared with our readers and subscribers on January 11th in our weekly report just a couple of days ago, and we said that silver most likely completed an ending diagonal, and it's about to break. Well, silver gave us a decent time for exiting overnight, and now it is breaking down. And it has all chances to continue further. So this is our target that we identified here. It's 29.20. But I wouldn't bet on it. It could move lower depending on what kind of wave it is and how silver progresses. If you earlier today we posted a bigger piece on silver, and it had a longer term perspective for the metal. Speaking about SLV, SLV is technically bearish, and nothing surprising here. The very interesting move today that SLV opened just below the 200-day moving average, which is a red line, and now is forming a bearish doji right after the freshly made bearish cross 50 by 100. So if it closes like this with the doji, either red or green one, it doesn't matter, the chances for a move lower will increase. And just to emphasize that this is a 2-day formation, and the circled one is an advanced block, and this doji which would close tomorrow, the candle which would close tomorrow, if it closes at this level, it would confirm a reversal on a 2-day frame. All right, so that's about silver SLV. Let's move on to gold. Gold is falling too, and it's interesting that it's technically similar formation that it made in the middle of December. This is a daily frame, and I'd like to emphasize this would be a bearish engulfing today, and it's a fairly similar that we had here. Well, like brothers. And what happened yesterday, we posted our weekly review where we said that despite the very green closure of the daily, weekly, and 8-day frames, we shouldn't be fooled because some technicals, several technical indicators and their combinations just gave us an advance warning that gold is going to fall, and this is exactly what is happening right now. Speaking about the 2-day frame, which is also closing today, it looks like it's gonna be a hammer, a solid hammer, and if it goes a little lower, it will also be a dark cloud cover towards the green candle, and this is my kind of deadly combination. I would say that odds will be strong bearish on 2-day frame as well as on the daily one, and the chances for gold to continue down will increase. This last chart is a 10-day frame, and something I would like you to remember. Tomorrow it's a closure, and in order for gold to reverse the odds on the 10-day frame, which is 2 times bigger than weekly, it needs to rally about 3.5% tomorrow. Is it doable? Well, I don't know, but the odds are currently with bears, and the chances for a failure to reverse here are much higher. So I would expect gold to resume the ride down somewhere here, and this is not the right, it should be a red candle, red arrow. Alright, so now let's move on and see what we are doing on Elliott Wave compound. So this is the perspective for gold that we outlined back in December, and what we are seeing right now, there are 2 chances. Either gold moves a little higher and completes alternative wave B, or this wave completes as wave 2 of a larger impulse, or there is still a possibility that gold forms an WXY here. So instead of C, it would be WXY or Y. So if it makes it here and reverses here, then we would see a rally continued. And just to make it clear, so this is the most perspective. Oh, yeah, it's already marked. So I just want to change the color here, the red one, so it's better visible. So it's for the red rectangle. So we are expecting gold to move here 25.30, 24.05 in the next 2-3 weeks. If, however, gold fails to stop here and moves down there in the blue rectangle, then things might start to get more interesting. This would be a stronger bearish move, and we would have a potential for wave 3 to be developed, a wave 3 of a bigger impulse. If it's possible, we don't know yet, but the chances are there, and especially if we consider very significant bearish signals on the monthly and larger frames. And the final one I would like to mention here is the GOD. What is happening right now? GOD is falling, and it kind of aligns with the bearish outlook for gold. This candle will likely be a spinning top or evening doji, and this red candle today will just confirm it. And this is the 4-hour frame, and it includes pre-trading hours. So right now 4-hour frame is completed at our top, and well, the odds are higher for a move down. Well, that's I think this is it for today's live chat. Let's see what is happening right now with before we go So nothing really happened on with indices so far. So far so good, as we discussed. Anyway, tune in for our daily report on oil, natural gas, and major indices after the market closure, and support our channel with your subscriptions, with your likes if you like the presentation. If we are working right now and trying to make this our regular feature, where we not only discuss multiple instruments, but also will take your requests, and we'll try to do live presentation, live analysis on Elliott waves or candles while doing this, and we plan to do this daily. All right, so thank you very much for watching. Enjoy your day and happy trading, everyone.